Good morning, good afternoon, whatever time zone you're in. Welcome to what will be the most exciting panel of the day, which is who's acquiring who, where are the buyers buying and where they are not, how are they valuing companies, and exactly what the hell will be the impact on rescheduling or firm rescheduling on the cannabis capital markets in general, and M&A specifically, because it's going to have a major impact. I think the moderator introduced everybody, yes? Okay. So I've got 4 quick slides, guys. I'll go through this in about 2 minutes. We're pulling all this data that you'll see from the Viridian Cannabis Deal Tracker. Hope you guys are all subscribers. If not, go on our site. It's free today. In about a month, we're launching our subscription service and adding new features and credit features and valuation features, so take a look at that. On the right side of this table, I know I'm breaking every rule of putting too many numbers on a slide, but I'm not a great PowerPoint guy. But on the right side, you can see this is 2024 year to date. This is only capital raises, public and private, debt and equity. And you can see there's been about $1.9 billion raised this year versus about $1.4 billion last year. So it's a fairly modest increase, but it is an increase. First time we've seen this since 2021. 2022, 2023, it was just all down years. Debt capital, equity capital, number of transactions, size of transactions. We're starting to see a turn. It's primarily debt. A lot of this is refinancing, not necessarily new capital coming into the market, but you can see there's been a significant increase in both debt and equity financing in the industry. And if I knew how to use this, you can see the average deal size of about $20 million versus $13 million at this point in time last year. This is meaningful. A lot of it is baked in or on the back of hopes of rescheduling and cash flow and more deal activity, higher stock prices, but we're seeing what we believe are companies preparing to become more aggressive on the M&A side, because the majority of this new capital is coming into the big MSOs, as it always has. Because to an investor, I can get out. There's some hope of liquidity. M&A deals not keeping up with the increase yet in capital. By the way, guys, if you come out to our booth, 502, we'll take our card, your card, and we'll send you the presentation. So M&A is still down year over year for both public and private companies. So the capital markets recovery, I'll call it, which I think is on the back of rescheduling, has not yet led to the commensurate increase in M&A. There are deals being done. You've seen Verano bought in Virginia and Arizona. There's still roll-ups. A lot of roll-up activity happening with single state operators in a state. That's some of the majority of Viridian's assignments today. We're doing roll-ups of best performing companies in Missouri and Michigan and other states to prepare them for sale. So we're seeing acquisition strategy on the SSO side, which I don't think has been done to the degree it can be done, because you have some incredibly strong performers, top line, bottom line, EBITDA margins, house brands. So we expect, hopefully after the meeting in December with the DEA, if and when that gets implemented, for the M&A side of the industry to pick up. We're obviously banking on that. This is the forward enterprise value to EBITDA multiple for the top 30 pubcos in each of the last, let's call it 7 years, when we've continually been teased with SAFE and SAFER and Garland and rescheduling, and all of you have been in the industry for some time, have kind of, I guess I'll call it cautiously optimistic, some losing hope that there'll be any meaningful federal change. But if you look at where we are now, I think we're trading at 7 times forward 2024 multiples. We're a third of the EV to EBITDA multiple we saw in 2021. A third. The industry is in better shape, 35 billion in legal sales, some companies generating $1 billion, $2 billion in revs, sustainable cash flow, and yet we're trading at a third of the multiples we were at in 2021. So we do think there's upside. We do think rescheduling moves the needle, ultimately because it takes all the taxes that are being paid to Uncle Sam and drives it to the bottom line. So there's just generally an upward reevaluation for cannabis companies across the board. And this is where we really think the kind of rubber meets the road. If rescheduling were to happen, and you take $1 billion in taxes that the top 50 MSOs paid in 2023, federal taxes, and you drop that to the bottom line, at least the 280E taxes, your cost of debt goes down, your cost of equity goes down, and your overall weighted average cost of capital goes down. What does that mean? More investment, hiring new people, opening up new stores, making more acquisitions. It liquefies the industry. This is why. The general cost of capital, I don't care if you're a private operator in Oklahoma or you're Curaleaf, your cost of capital on the debt and equity side goes down. It increases the value of your dollar of earnings of cash flow. So this is kind of where it's all happening. Having said all that, let's jump to the panel. I'm going to break out my cheat sheet notes because don't think I remembered our call from last week, the prep call, because I don't. And here we go. First of all, thank you everybody for participating. This is a really meaningful group of people up here, so I'm appreciative of that. So we'll start with the most obvious question. What has been and will be the impact on the cannabis capital markets? Consolidation, that's kind of the topic of the panel, but capital raising generally, if rescheduling were to happen, we'll just go this way.
Sure. I mean, it would be incredible. I think what we have seen is obviously just a shift in the type of M&A that we're dealing with. It's no longer these really huge, massive deals. We're dealing with more creative companies coming together and maybe joint ventures and, you know, I want to call it sort of M&A light as groups start to figure out what they're strong at, what they're weak at, and bring them together so they have a bigger footprint, they have more power. Rescheduling would obviously assist in evening the playing field a bit more, certainly give, you know, a bit of a kick in the right direction for the entire industry, just from a perception basis. You've got so much more interest. I mean, at the beginning of the year when they started talking about rescheduling, we had more banks and credit unions and just sort of those traditional financial unions that were coming in interested in actually servicing the industry. And so that all has this trickle-down effect that would be incredibly positive for the industry.
You know, you brought up a good point, Laura. I don't know if most people are aware of this. In 2021, I think we saw 5 or 6 deals. These are primarily acquisitions, the big public MSOs, private single center, that were over $500 million in consideration or enterprise value. We haven't come close to that since. We saw the Mercer Park SPAC, I forget what they raised, $220 million bucks, but the average deal size has come down. The bigger players in many states have been acquired. There's still a lot of room to go. So that's a really good point. Why don't you go ahead, Barbara?
I think that I'm maybe a little more skeptical of how rescheduling might impact the capital markets because by the time we get there, which I don't think is, from what I hear, not anytime really soon, there's going to be some baggage in this industry. I think we already have 18 months from what I see, and I lead our national cannabis tax practice, so I see quite a bit across the country. Even now, we've got probably 18 months of a lot of companies not paying their taxes, and absent someone winning a constitutional lawsuit, which could happen, those taxes are going to have to be paid eventually. So I think there's a lot of catching up to do, a lot of dealing with the baggage, which may be 2 or 2.5 years by the time we get to rescheduling. And I would advise the capital markets to do that tax due diligence, and you know, sometimes reps and warranties. Good luck getting that cash, I guess, after the deal closes.
Yeah, I think I'm in that camp also in terms of being skeptical. I mean, we had 2 presidential candidates coming out in favor of rescheduling. If I use the MSOS ETF, you know, as a sentiment driver, we were at 11 back in May, and now we are at 7. So despite all the positive momentum and the fact that we have a hearing coming up, and the possibility that very likely that we'll get rescheduling next year, here we are at 7. I personally am fielding less calls from investors than, you know, in the era of almost passing safe banking, late 2022, or of course late 2020 after the Biden election and the Georgia runoffs. So I think that we are getting all a bit ahead of ourselves in terms of the optimism here. But to me, we'll come to it later, but to me what matters, this panel is about consolidation. And when I think about consolidation, it's more about, you know, what shape will it take in the future? The reason that we're not seeing consolidation right now is because valuations are so depressed, right? So sellers don't want to sell, buyers don't want to buy. Sure, it's a share swap, so maybe you should focus on the future, But I think the issue is that valuations are depressed. Boris Jordan, that just spoke here, I think when we were at 11, he said something like on the MSOS ETF, he said he wasn't planning to raise capital yet because valuations were still too low. So I don't expect a jump on M&A given where we are, and even with I would expect a slight uptick on valuations after rescheduling. Sorry, very long-winded there.
Frank?
So there's no question, being Captain Obvious, rescheduling is going to help the industry, but it's not a panacea to all the problems of the industry. I think that rescheduling will attract some new capital, or at least people who are on the sidelines. Right now, what happened, as we all know, when rescheduling was announced, the sector went up 37%. You know, everyone was celebrating in the streets, and now the stocks are below where they were at that time. So I think that the more pertinent question is, what does it mean that rescheduling is not happening, and when will it happen? And I agree with you that, you know, I think that, you know, we're still looking at several years away. And we're certainly, even if it does happen, you still have to deal with oversaturation, lack of investor capital. I mean, all these problems still exist, and they're not going to go away just because of rescheduling. It certainly will change the fortunes of the balance sheet for every operator if that were to happen. But there's a lot of issues that have to be dealt with, and you raise a really good one. You know, a lot of people are not paying their taxes. You know, I don't know how you dismiss the IRS memo that came out a couple months ago. I think that's a very dangerous way to raise capital right now. But, you know, we'll see. But it's not the primary solution, but it is definitely going to help the industry. There's no question.
You know, if nothing else, from any fundamental business valuation perspective, if your bottom line cash flow increases, not from an operations perspective, but from a lack of 280E taxes, there is an upward increase in valuation, and it should reflect that in both the public markets and the private markets. I'm also not sure it's going to take 2 to 3 years. If you look back over the last 20 years when the DEA has actually rescheduled, they go through the comment period, and now they're in the period of implementation. It's about a 10 to 12-month process to actually implement that rescheduling on the DEA-controlled Substance Act. So I'm not sure it's a couple, 3 years
but
away. I'm not trying to be Pollyannish
don't dismiss
here.
the lawsuits that are going to be filed.
Spoken from
war
the lawyer,
war
he's
chests
already
are
suing
already being
me.
built to file suits against rescheduling.
Well, that should have and still could happen during the comment period. Isn't that why the comment period is opened? For critical comments or lawsuits or positive comments. So, I don't know, you're the lawyer on stage.
And
What?
I mean, I would, well, I'm not a lawyer, but what I would say here in terms of those challenges, right? Supposedly, like Congressman Perlmutter said before, it's been a very deliberate, very systematic process. They haven't necessarily rushed it. They are dotting, you know, the I's, crossing the T's. So supposedly it's going to be bulletproof, and there will be legal challenges. But we're not expecting, despite what happened with Chevron, we're not expecting any injunction to delay the process. I think my bigger issue is that the industry needs those institutional investors, right? And are they going to come in because we have this tax benefit from rescheduling? I personally don't think so, because you need uplisting, you need more clarity in what the future looks like, right? I mean, Vice President Harris wants to deschedule, right? So what does that mean? Are we going to have interstate trade? Are we going to have a tier industry? Or are we going to have the current silo system? So I think that, you know, back in the day when I would sit with Fidelity, Wellington, or Capital, you know, and going for a meeting, people would ask me, like, what's going to happen with stocks tomorrow? Or what's going to happen with stocks if this thing happens? They would ask me, like, what's this industry going to look like in 5 years' time? And that question right now, it's a difficult one to answer. So totally agree that rescheduling is positive. It will help the balance sheets. Some already are being held because they're not paying it. But whether it's going to be the thing that's going to drive us back to 15 on the MSOS ETF or 55, like back in February 2021, I don't think so. There's just too much uncertainty in terms of what's going to happen and how they're going to do things.
Right. Rescheduling will not bring Wells Fargo into the industry.
Right.
Rescheduling, you know, won't bring the premier private equity firms into the federal legalization is what they're mandating for them to really cross over.
It's a step in the right direction. I mean, I think it at least, and I 100% agree with you, but I think with an industry, and sometimes it's tough, that saying is so silly, right? How do you eat an elephant? I don't know who eats elephants, but one bite at a time. And I do think that it is, if and let's say when, but if it happens, it certainly moves the industry forward and it allows us to make some progress. I think though what's most important at this stage is what companies are doing with that information and what they're doing in anticipation of it. And I think you're going to see a lot of companies whose risk tolerance, to me, is a bit much unless you're a really large MSO and you can, afford to be in litigation for the next 3 to 5 years once it happens. I think the unfortunate part is you're seeing folks go, well, so-and-so didn't pay their taxes, so I don't have to pay my taxes. And I think that's going to have a drastic effect on M&A in the future because it's already been an issue. And so we're always addressing it in contracts, reps and warranties. You never want to have to go after money, right? We want to have tax holdback accounts. We want to have different mechanisms to protect sellers. And I think this is just creating a bit of it's exacerbating that issue.
We did see, I think it was GTI, the first ever syndicated bank loan among FDIC insured commercial banks. This was about 2 months ago. Never seen that before. We didn't see FDIC commercial banks in the industry other than Valley and East West from California, and now we see our first syndicated bank loan. So it's very much on the margin, and there's no question there's no panacea, but rescheduling does bring liquidity to the industry as a whole. So let's move on from that. If rescheduling does not happen, we talked about this on our prep call, what can companies do to mitigate the horrendous impact of overtaxation? We spoke about ESOP plans, we spoke about tax deferral plans. Can you guys jump into that? Because if this doesn't happen, how do you recommend companies deal with it?
I'll give you a very short answer. I think they'll do exactly what they're doing right now, right? Which is most of them have decided to take action, right, and not pay their taxes. They are providing, well, let me rephrase that. They are provisioning for taxes as a normal corporation, right, as if 280E did not apply to them. That's what most companies are doing now going forward, and they are doing that for 2023, and most of them have filed for returns for amendments for 2020 to 2022. And they're getting that benefit, and I'm very sure most of them will continue to do the same thing. And the more of them that do that together, I think that's going to be very powerful. And people will say, well, the IRS will come searching for them eventually. Well, let's see. We have Chevron again. We have a legal process in terms of the lawsuit on Boyes, right? So things could play out very differently. Maybe in the end, they have to pay those taxes someday, but without penalties and not much interest. So, short answer is that they'll do exactly what they're doing right now, which is not paying it. Not paying 280E, because again, from my perspective, rescheduling, the main thing about rescheduling is that 280E goes away. There's no other big change. Less stigma. Maybe some congressman out there wants to, be more active in the space because we have rescheduled. Maybe the research argument I don't buy because it remains federally illegal. So the main benefit is that you don't have to pay 280E, but they're already not paying it. So
You can only kick that can down the road for so long, though. I mean, the IRS eventually catches up. I don't know if many people know this, but yes, you might be able to get an installment plan once they do catch up with you. But once you're on an installment plan, you not only have to regularly, never missing a payment, pay those prior year taxes, you also have to stay current on your current year's estimated taxes, which is a huge cash commitment all in, especially right now for some of these companies. And that's actually what I see as the impetus for some of them. Taking various tax positions and amending returns because they know that they can't afford to be on an installment agreement. It's a temporary survival tactic, but you can't do that forever.
Focus, on basic operations, basic business. A lot of my clients cutting costs, cutting staff. Really fine tuning to try to weather this storm. Some of them are not paying their taxes, but my client base, most of them are. They're not willing to take that risk. I know there are firms that are providing these opinions. I have a different opinion on those opinions. But, it's not just about the 280E. It's also about basic operations, competition in certain states, which states to go into. All of that is just basic business that people have to be focused on.
I totally agree with that, Frank. And I think that the ones that are cash flow positive with 280E, and maybe they don't make estimated payments, but they pay at extension or at filing, those companies are going to be the superstars post rescheduling because they're already doing well, even with 280E.
I don't know if, Frank, we spoke about on the prep call the increasing or seemingly increasing use of the ESOP structure to mitigate taxes. Didn't you say that you're incorporating that?
Yeah, we're seeing more and more interest in exploring that as a way to exit. It's very complicated, very unique, and you know, I have my own conference on October 21st, and we have a whole panel on this. But we do feel that, look, there's a lot of investor fatigue. People want out of the industry. They don't want to be in, yet there's not a lot of cash. So deals have gone from years ago, as you know, where people were paying cash or 50-50 to a third. Now it's 10-15% cash if you're lucky, the rest in a seller note, and the rest in stock. And people aren't very excited about those because usually the companies that are making those offers, the MSOs, have so much senior debt ahead of you. It's an unsecured debt deal. So ESOPs, we're going to be rolling out a national program really promoting this because the firm I moved to, Blank Rome, we have tremendous ESOP experience, both outside of cannabis and in cannabis.
Just take a minute and explain structurally why it has the tax mitigation features in an exit.
Well, basically, and Barbara can talk about it more than I can, you are using your income that you're not paying taxes on.
So it can be a good idea in a limited situation, and it's not just available to the cannabis industry. ESOPs have been around for a long time, and you can do an ESOP in any industry. But I think that what's especially attractive in the right situation to cannabis companies is if you're an S corporation, that S corporation does not itself pay taxes, and if that S corporation is owned 100% by an ESOP, then all the income flows out to a tax-exempt entity, which, so 280E doesn't impact the
It's a
cash flow of the
280E
company.
avoidance mechanism.
Well, don't say avoidance.
No, I know, you don't like
we
when I
wanna
say that.
Is this being recorded?
Avoiding
Don't say
taxes.
that.
Structural.
Structuring, planning.
So it has a unique proposition to it, and I think that you've started to see, I don't know, maybe half a dozen of these have been done. I think you're going to see a lot more, especially in light of the uncertainty surrounding rescheduling.
So post-rescheduling, if it happens, how does the buyer, which has been public, the public company buyer has been the buyer in 95% of M&A deals in the industry since we started tracking this 10 years ago. And they've been buying private companies because that's M&A. Public buys private, there's always that arbitrage in valuation. But if rescheduling happens and now the big buyers are more powerful buyers, right, they're raising a lot more money, their stock prices are up, they're getting more aggressive, do they change their strategy and the types of targets they're looking for? How does M&A strategy change from a buyer perspective post-rescheduling?
I'll jump in. I mean, to me, it's more the question, what can they buy, right? And what type of M&A can we see? Yes, if we get rescheduling, you get some uptick on valuations. Let's see how much, right? But yes, that maybe gives them more ammunition to buy, sellers more willing to sell. But the question is, MSOs buying other MSOs, there's too much overlap, right? The rare examples would be maybe Air. They won the lottery with their Virginia situation. License, and of course they have all those stores in Florida, right? I think that's a potential target for another MSO. Jushi Holdings, attractive in Virginia, Pennsylvania. We don't know where the caps are there really. I mean, can someone like Curaleaf buy Jushi, or would they have overlap in Pennsylvania also, right? So to me, MSOs, very few opportunities there, not many cases. MSOs buying SSOs, yeah, somebody wants to tuck in, they don't have Ohio, they don't have Maryland, you may see some of that. But I think we want to move on in terms of M&A from what I call the footprint. It's going to be more brands, maybe companies wanting to enter adjacencies like hemp derivatives in some cases. We're beginning to see that, hear about that. Companies looking overseas. We've heard of a number of MSOs, not just Curaleaf, which has already done deals overseas, but MSOs are going to Germany to conferences and meeting people. So I think the type of M&A will change.
I think my practice is national, and I represent startups too.